Stripe this week holding its annual product event here in San Francisco. Stripe Sessions, the payment giant, out with some AI news, among other things. Here to talk about that and a lot more is John Collison himself, president and co-founder of Stripe. John, great to see you.
I'm delighted to be here.
Yeah, it's really great to have you here in person. We have a lot to talk about. I do want to start with some of the news out of Sessions, though. The AI stuff was really interesting. So you guys unveiled what you're calling the first AI foundation model for payments. How does that actually work? Walk us through it.
Yeah, so we held Stripe Sessions this week, the Internet Economy Conference in San Francisco. We had 7,500 people in attendance discussing the future of commerce. And as you can imagine, AI, there's a lot going on, and it certainly feels that way in the industry broadly and for us within payments. And so one of the announcements that we had was that we are launching the first payments foundation model. And so just like LLMs have this deep understanding of language and kind of broader reality, and then can be used for all sorts of different tasks, companies traditionally have had specific, for one purpose, AI models where they might have a fraud prevention model, or they have a a conversion optimization model or something like that. And again, that was the approach that we had previously that delivered lots of benefits. We've seen an 80% reduction in card testing, which is one particularly pernicious kind of fraud, over the past 2 years. But now what we're doing is we're bringing it all together where we trained a foundation model on all of the Stripe historical payment data, and then we can use this to make inferences on behalf of merchants, whether it be fraud prevention, whether it be improving their conversion, because we have this deep understanding of what's going on in the payment data.
And so are there other underlying models? Are you importing anything from OpenAI or Anthropic, or is this truly proprietary, sort of built from scratch?
This is proprietary. This is built in-house. I mean, obviously, using lots of the open source AI infrastructure available, but this is our own that we trained on all the data that we have.
And then you were just talking about fraud a little bit too. I would think AI is also, it's got all these great benefits, but it also probably has a lot of downside for fraud. We talked about Visa CEO about this recently. What are you seeing on that side, and how important is fraud prevention in this?
Yes, anytime you get new technology taking off, the automobile was very useful for police, but very useful also for bank robbers. And it took us a little while to figure out the whole bank robbing situation once the automobile came along. And the internet also provided this new venue for a different kind of fraud to take place. And so similarly with AI, it is a constantly evolving adversarial game, and I think businesses very much feel this way, where a lot of deepfakes are correctly getting a lot of airtime. There are new kinds of fraud that's possible, and so we view our job at Stripe as businesses just want to be able to focus on what makes the product better. We've got a huge number of AI businesses that are really breaking out right now on Stripe, and that's one of the fastest takeoff areas. But they want to be able to focus on shipping an awesome AI product and the intense competition that they're in. They don't want to have to focus on the nuts and bolts of payments. And so our view at Stripe, and a lot of what we announced this week at Sessions, is the products to let them just handle everything out of the box and be able to focus on what makes the product better.
The bank robber analogy is great. There's also, I think of crypto too, where people talked about the early days, how it was used for money laundering and things like that, but there's also a lot of good that can be done, and cross-border payments. That was another area of focus. You had some stablecoin announcements, a stablecoin card backed by Visa. What is the demand right now like for crypto payments? Are people actually using those?
Yeah, so we have seen huge growth in stablecoins in particular. And crypto means a lot of different things to a lot of people. And there's all the speculation side of it, which has been a big industry that we're not particularly interested in. But then stablecoins are, no fun to speculate on. They just maintain a single dollar value, but they're incredibly useful for financial services. And so what we announced is we are adding 100 new countries, from Argentina to, quite topical, the Vatican, are now, we have available to people stablecoin powered money management functionality. And so people can keep a balance, they can do payouts, things like that, powered by stablecoins. But I think we're really seeing this takeoff moment for stablecoins, where the supply, the total dollar value in the stablecoin system grew by 40% over the past year. And so there's really fast takeoff happening. It's obviously the legislation being debated right now. We acquired a company called Bridge late last year, which is a stablecoin orchestration platform. So what we're seeing is not this retail use cases or speculative money go up use cases. Instead, it's real world businesses. It's people from X to Scale AI to remote.com using stablecoins for paying out users around the world. It's companies like Chipper Cash, Dollar App, who are allowing users in Latin America or Africa to manage balances. But real world usage finally starting to take off, and you see it in the numbers.
And does the end consumer know that they're dealing with cryptocurrency most times? Like, I think of a payout, for example. Does it matter that it's cryptocurrency?
So exactly, this is what I think is starting to change, because previously it was all very crypto native, and there was a huge amount of jargon. You got your NFT and your minting and everything like that. Whereas, we serve businesses, right? And they just want to get stuff done. They're not interested in all this kind of stuff. And so what you'll see in the Stripe launches is that we're just describing the functionality. You can now pay people out in a whole bunch of new countries. You can get access to a Stripe account if you're in Argentina, and these sorts of functionality, but we're actually just mostly speaking about it as digital dollars. We're not getting into the whole kind of crypto jargon.
You're not going back to NFTs. That's
exactly, yeah.
The AI boom right now, what are you seeing on Stripe? How are you seeing that translate to some of the growth in Stripe's payment business?
So when we look at the fastest growing companies on Stripe and the companies that are really breaking out and growing quickly, one of the top segments we see is AI companies. And so, you hear about this in some of the headlines where Cursor just announced a $9 billion valuation. They grew from launch to $300 million in ARR in just 2 years. I mean, this kind of growth at the fast takeoff of all sorts of, the AI labs, the AI product companies across verticals and things like that, it's just much faster than any of the previous trends like SaaS that we've seen. And so that's really powering a huge amount of growth within the Stripe business. And it's not just AI specific companies. Obviously, a bunch of existing companies are using kind of AI tools or AI productivity to power their growth. So that's one side of it where it's definitely powering our business. It's also powering our product roadmap. And so, we discussed a little bit of it already with the first payment foundation model, but we're also seeing things like we launched a toolkit for agentic buying. Right. And what that means is that right now, all the buying happens in this web browser modality, right? Someone sends you a link and you click into a website and you fill out your details in the web browser and then you eventually hit buy. Like, that's how all internet payments happen. But if you think about your workflows right now, you probably have a preferred AI tool. Maybe you use ChatGPT or you use Claude or something like, or Perplexity or something like this, and you're just doing a lot of stuff there. Maybe previously you searched for information and now you just ask your AI assistant for it. The next frontier of that is actually going to be commerce taking place inside these applications. And the term you're going to hear a lot more of going forward is MCP. That's kind of the buzzword in Silicon Valley right now, where it's enabling AI tools to actually go interact with and manipulate the real world. So it's not just understanding information out there on the web, but it's actually doing things and understanding how to go make a purchase or something like that. So we launched a toolkit for, against the first as far as we know, for agentic buying. And so it means that you can do something like inside your favorite AI tool. ChatGPT just announced that you can do buying directly from ChatGPT, and we're going to see much more of that kind of activity.
What does that say about the change in consumer behavior? I would think people are more comfortable letting an agent go and maybe buy something on their behalf. Where do you see this all going on the shopping side?
Yeah, we had Kevin Wheel from OpenAI on stage yesterday, and he made a point that I really liked, where he was saying, your first 10 seconds in a Waymo, you're kind of nervous about this AI, driving you around, and you're like, watch out for that bicycle, whatever. And then after that, you're like, after the first 10 seconds, you're on your phone and you're just like chilled out. You're like, when will this be here? But like, you get used to the new modality much quicker than people maybe expect, and suddenly these things become normalized. And certainly in San Francisco, we have all these self-driving cars whizzing around, and it just becomes normalized. We think similarly, for the first time or two that you do an agentically powered transaction, it'll feel a little weird, and then you'll wonder why it didn't always work this way.
And then what about security on that side? I would think there's also part of that would be knowing that it's actually the AI agent, it's not some rogue bad actor taking your credit card.
Totally, and this gets back to, again, a big area of focus for us, over the last 10 years, has been security and reliability. And this is honestly why many of the businesses coming to Stripe are coming to us, because of that rock-solid reliability and the fact that we are building security into these products for everything we do. And it actually gives people more control in a way, because they can tell, where their card is being used and what it's going out and doing.
And as we're talking about the shopping experience too, you mentioned sort of consumer behavior, people using chatbots more. Things are, anecdotally at least, moving off of Google. It seems like there's other ways to shop. Advertising is looking a little bit different. Where do you see all of this going on the search side, and how does Stripe fit into that?
Yeah, again, the big change that we see is that right now everything is constructed around making a web purchase modality and there's a pretty significant platform shift on the horizon. Again, it hasn't happened yet. We don't have to overhype it, but we predict it in the future that there will be a lot of commerce taking place directly within the AI tools that people are using, as opposed to, it's kind of funny when you think about it, that an AI can do everything for you. You can have ChatGPT go off and deep research some entire thing for you, but then to actually go do the steps, you need to come along and, manually enter details yourself. That is clearly not going to persist. And so we are certainly gearing up, and all the businesses coming to Stripe sessions are gearing up for this agentic commerce future.
What does that mean for Google?
TBD. I mean, Google is a phenomenal, if you think about companies that are well positioned for AI, Google, it seems like Gemini 2.5 is really good. It seems like YouTube is taking off. So I don't know. I feel like sentiment-wise, people not wrongly associate Google, they didn't do what Meta did, where Meta rebranded, where there is Facebook that is part of the larger portfolio of products. But you think about Google as a conglomerate where they have search as one part of their business. They have YouTube that just seems to be on a tear as a business. They have all their AI products, which are really incredibly good, and they're a leader there. And they have their custom silicon and everything like that. They have Waymo, which we were just discussing. So I don't know. It feels to me betting against Google may be a little silly.
What about Mark Zuckerberg? He was on stage with you, and that actually made some news. You asked him about the Epic battle, you asked him about Apple, and actually Google. What was your response to Mark? I guess it was sort of like so I had a colleague describe it as spicy, those comments. What was your response to Mark's sentiment on stage?
I mean, Mark is obviously one of the greatest entrepreneurs of our generation, so I think it's very motivating for people to see him there. And what I find cool is, again, they are very much positioning themselves for the AI future. And a point that he made that I thought was interesting was that they think that there'll be Meta is getting ready for there being much less distance between businesses' intent and their execution. And so right now, maybe a business is willing to acquire a paying customer for $10 or something like that, but they have to go figure out all the targeting, and they have to go figure out all the creative and come up with everything like that. Whereas now, soon, powered by AI, they're getting ready for businesses just being able to express some intent. I want to be able to get customers for whom this product is a good fit, and then a lot of the execution will be able to be handled by AI. And I think that's a good generalizable lesson, that narrowing of the gap between intent and execution, and kind of a magic wand effect where AI is able to take care of, just take care of a bunch of the steps in between.
A lot of us would like that, just to sort of outsource a lot of this. While we're talking about Mark, part of that discussion was also around Apple. So we got this final ruling forcing Apple at least to let developers link out to third-party payments. What does that mean for Stripe on potential upside and a growth opportunity?
Well, it's like you saw in the new policies that Apple announced, where it's going to be a fairly material change, where now developers have more design and commercial flexibility in terms of the payment experiences that they can put in their applications. And so from a developer choice point of view, we definitely heard quite a lot of positive sentiment because there's more options available to people. I mean, no one is prevented from using the existing payment options, but there's a new set of options available to people. And so I think you're going to see quite a lot of change in applications where maybe there were payment experiences that people want to put in place before that they didn't have the flexibility to do so. And now we're going to maybe see those emerge.
And you guys have launched some developer tools and moved pretty quickly to do that. How are you positioned in light of some of those changes you mentioned?
Again, we just want to be the easiest way for people to accept payments on the internet, and we already, we have been investing in many regards on that up to now. We have Stripe Checkout is the simplest way for people to accept payment methods all over the globe, because it's actually, sure, you want to be able to accept credit cards, but people in Brazil use Pix, people in India use UPI, and so Stripe Checkout bundles all that stuff together. We have Link, which is our way of remembering payment credentials across websites. That's really on a tear in terms of growth, and so I would say we've, in a way, we did not predict this outcome, but a lot of the work we've been doing over the past 10 years has really set things up so that for developers, just if you want to easily accept money from people all over the world, a lot of that work over the past 10 years has set us up well to be ready for it.
What has been the feedback from developers since this ruling and since you've rolled some of those capabilities out?
I think we're early yet, and so cautious excitement is how I would characterize it. But let's see when all the the new apps are out there and how consumers are responding. So I think people need to A/B test things. People need to actually deploy some apps and see how it works. But I would say cautious excitement.
Has it changed your own growth projections, just in terms of payment volume and what's possible on the Stripe side?
It's so hard to project. Like, how do you project growth these days where, you have that kind of effect and then you have all the tariff uncertainty and difference? I mean, I was just looking at the news and, just like the new UK-US stuff. And so we don't try to get too fine a point on the exactitude of the growth predictions because in this day and age, like maybe 10 years ago you could have done that, but you have to be able to roll with the punches.
I'm going to turn the question that you asked Mark on you. Have you talked to Tim Cook or Sundar at all? And maybe we'll start with Tim. Is it something you've discussed with him, just the payment side of things?
I haven't talked to either of them in a little while, so no.
Fair enough.
Yeah.
Okay, had to ask you.
Yeah.
Well, while we were mentioning tariffs, there's so much uncertainty around some of these trade deals. As you said, we just got something with the UK today. How are you navigating some of this uncertainty?
The same way we all are, by refreshing Twitter every now and then. No, look, I think clearly business sentiment, I would say, is quite negative on the tariffs. And we in the Stripe data are not yet seeing, consumer spend is holding up at the moment. Now, the question one would ask is that holding up because it's fundamentally healthy, or is it holding up because you're getting some pull forward effect where people are trying to do pre-buying in advance of the tariffs? Only time will tell. I think we'll have a clearer view maybe 2 or 3 weeks from now. I think the thing that is interesting is, again, businesses are quite worried, and in particular, the tariff inventory hasn't bitten yet, right? Businesses have been burning through their backlog of prior inventory that was not tariffed, and the shelves are about to be restocked with stuff that was actually subject to the tariffs. And so, again, I think we'll know a lot more over the coming 4 to 6 weeks when people actually start selling tariffed goods.
Are you seeing any cracks in the consumer so far? Anything that Jerome Powell and the Fed should be looking at?
Not yet.
So it hasn't bitten yet. It
Correct.
has not come through. Any changes, though, preemptively? Anything you're just even hearing anecdotally from businesses?
I think all businesses are trying to set themselves up for agility. Again, you probably can't influence the outcome. You probably even can't do that good a job predicting the outcome. None of us can. And so you just need to be able to be well set up and flexible. One of the trends that we talked about that I find quite interesting, there's obviously like the day-to-day, week-to-week blocking and tackling of how you handle the tariff stuff. As you think about the longer-term strategic arc of businesses, one thing that we're noticing is, tariffs apply to physical goods, but we're seeing obviously huge growth of businesses selling digital goods, like the AI companies being an example of that, where they are selling digital goods that are not subject to tariffs. An interesting trend we're seeing is even traditional businesses that were in the physical goods business expanding to digital goods, which don't have these dynamics. And so one of my favorite examples of this is Fender launching Fender Play, their digital platform. They're connecting guitar students with teachers, and this is a really big business for them. They've had, 250,000 people take lessons with this. Like, it's not a side project. And so we're seeing, I would say, a lot of businesses almost over the long term reshaping their businesses so that they are more adaptable in this perhaps slightly more protectionist world.
That's a great point. And it's really interesting, too. I mean, I don't know if it's a direct impact from tariffs, but sort of hedging a little bit.
Yeah, and I don't think that is a direct impact
Right.
from these actions this year. I mean, it predates it, but I think just as businesses do their 5 or 10 year planning, I think setting themselves up to be able to sell products more globally, sell products more seamlessly, I think that really stands to businesses.
As we move into this more protectionist era, and tariffs are one example of that, how does that affect your ability to do business globally? Stripe is quite a global business. You are European yourself. How are you thinking about it?
Again, it's. I think it's definitely affecting business sentiment, where we hear different things from European business leaders than we would have 2 years ago. It's affecting business sentiment in the United States. So sentiment is for sure affected. I think from a business strategy point of view, we are powering a lot of the breakout digital companies, and what's interesting about them is they are actually going global faster than we've ever seen before. And so you will often have an AI company that launched 2 years ago and is already selling to all 150 or 200 countries, and that's an interesting phenomenon. So we're in this weird moment where there are both increasing headaches in certain regards for businesses operating on a global business basis, and businesses are going global faster than ever before, and that dichotomy is kind of interesting.
Interesting, and probably an offsetting effect too. Maybe they're
absolutely. Yeah.
What about other White House policies that might change the way you hire or think about your business? I think about visas and immigration, for example. Is that changing the way you can look at hiring?
we are not changing kind of many of our policies in response to this stuff, and say on visas we haven't run into any trouble, touch wood, and so I hope that stays the same. Anything
you are particularly supportive of, or changes in this new administration that would be particularly helpful to Stripe?
Look, I think there are certain areas where often what, and again, I think one of the critiques you hear of the current tariff moment we're in is that it is creating a hesitancy around investment where people enter a wait-and-see mode. And that can be auto-catalyzing where, if businesses get into this wait-and-see mode, then they wait and sign contracts and, you start to get this knock-on effect. And so I think creating more certainty is generally a good thing, and it's generally a good thing for the business environment. There's some places where it would be useful to have more certainty, like what I just mentioned, but there are places where definitely we're on a path to getting more certainty. And so one that's been much discussed, but I think is correct, is on the crypto side of things, where there was a huge amount of uncertainty about who regulates crypto and what the framework is, and is the administration even okay with crypto and things like that prior to November. And now we've seen a clear and consistent message from this admin and kind of all branches of government that we want to have a sensible regulatory regime for crypto. And again, it's we should be embarrassed that Europe and the EU, MiCA was passed, and it's like a broadly sensible regulation, but we're behind now when it comes to sensible crypto regs out of the major economic blocs. And so the stablecoin regulations are being debated right now in the House and the Senate. But I think that's something that we are enthused about the prospect of, because just everyone should be excited about more stablecoin, good stablecoin regulation coming. It'll lead to better consumer protection, and it'll actually give businesses the ability to invest and adopt these technologies.
Have you spent any time in DC since Trump was elected?
I've been once, yeah.
What was the message you heard there? Was there sort of a sentiment you picked up while being there?
It was a discussion about digital assets and crypto, and as you can imagine, the people at the Digital Asset Crypto Summit were very excited about crypto.
Yes,
so.
Okay, fair enough. So not an overarching vibe. Well, speaking of vibe, should we talk about vibe coding?
Yeah, let's talk about vibe coding.
We were talking about AI in the beginning, but I wonder if you're seeing efficiencies within Stripe's business. Are you able to, is it changing the way you're thinking about anything? How much of the coding and engineering work is being done by AI?
Yeah, I think you always have to be careful of people trying to make headlines with this stuff where they, talk about stats and everything like that. Like 100% of code at Stripe is AI powered at some level because, people are using LLMs to help them plan their work. They're using, VS Code, which has, a whole bunch of AI features. Some people at Stripe are using Cursor. And so people talk about this stat of, what percentage of code is powered by AI. I think it's a bit of a vanity metric because it all exists on somewhat of a spectrum. What's interesting to me is we are in this really fast takeoff point of AI coding, where what you can do now is completely different to what was possible 2 years ago, which was itself, a huge advance from 2 years prior. And so the only thing I know is that we are in this. It's like the, it's like the web in 1995 or something like that. There's clearly something here. The technologies are progressing at an incredibly fast clip. You see this in the progress of the companies themselves, where, like I said, Cursor $300 million in ARR, the news of Windsurf being acquired for $3 billion by OpenAI. It's just this fast takeoff space. But the main thing for me is this is not the end state when it comes to AI coding. Both the products are going to get way better from here. The market structure is going to evolve. Sometimes the kind of the big companies who obviously are going to take this very seriously, the Microsofts and Googles, clearly are not sleeping on the opportunity, and they are going to have new offerings. And so, as a company that is essentially a software factory, we produce a lot of code every week. It's exciting for us because the infrastructure is getting better so much so quickly, but it's a real tech race. And actually, it's a little bit of, it's been a while in Silicon Valley since we had a good old tech race. You read these accounts of the 1980s where there was a new leader in, computer manufacturing or disk drive manufacturing, the Clayton Christensen stuff, every few weeks. And there was this very fast turnover. Things got kind of stable there for a while in the 2010s. And we had like a few clear leaders, and they were persistent clear leaders. And so just for me, it's exciting that we have a good old fashioned tech race is happening again.
Is it coming from the disruptors too? I think the big tech companies are very much a part of it, but then you have private companies that have popped up, and a lot of the startups you mentioned. Talk a little bit more about that. It's fascinating to hear your view on it, but who are some of the players, and is it this new paradigm where it's not just Google, it's not just Amazon? You've got OpenAI, even though kind of a hyperscaler itself.
Yeah, I think when you have these tech trends, I think you often tend to get a battle where the smaller companies are, like, a part of the reason we love working with startups at Stripe and that we power all these companies is because they are at the frontier and they are where all the new innovations come from. But then what tends to happen is that they will be able to operate initially with more agility, but a company like Google or Microsoft has so much distribution and they're so effective and they're really good at engineering, but they'll have slightly longer timelines for this stuff. And so you end up with a battle where it's, can an AI coding startup get to scale and get to distribution faster than an incumbent can start to gear up and really start selling this? And it depends, right?
Yeah.
It depends on the particular industry. We've seen things break one way or another, but I think that is the industry dynamic that we're seeing here, and it would be very hard for me to predict how it shakes out.
What are you seeing in terms of efficiency? Is it helping margins at Stripe? What impact has AI had on your business?
It is really hard for us to actually come up with robust statistics on that I would feel comfortable saying on air. Like, we have seen more activity at Stripe, more code is being shipped now versus this time last year by quite a meaningful margin. Do you attribute that to AI? Is that the same thing as is more code being shipped equivalent to more useful features in the hands of customers? I mean, we did have a great set of ships at these sessions and a whole bunch of stuff that we're really excited about. But yeah, hard to say.
It's hard to measure too, and we think about the effect on the workforce. It seems like there's a little bit of anxiety out here around what it's going to mean for jobs if you need fewer people, but also you're not seeing that directly translate, especially in public companies, to better margins, better profitability. They're all just saying we're more productive.
Yeah, well, there's two things, right? One is everyone gets caught up in the first order effects of, I will be able to pull cost out, but people exist within an industry structure. And so if they exist within an industry structure that's, brutal competition amongst three actors, then maybe all of them get lower costs, and those gains are passed on to consumers because they're in a highly competitive industry. And so, but people look at the first order effects, which is we'll be able to strip cost out, and not the second order effects, which is it's going to lead to a price battle, and prices are going to come down. And so that's I think maybe the effect that people forget about here is like fully reasoning through the long-term impact. I think people are chasing a lot of clout, talking about AI will replace this, AI will replace that. What we see is engineers getting way more productive as a result of all these new technologies in their hands, but maybe expectations for companies just go up. Like we had the biggest set of ships ever. We had 60 to 70 major product announcements that we released to customers, and much more than at prior sessions. But maybe that just becomes the ongoing expectation that people have for us is way more product releases. And the Greg LeBond has this quote at the cyclist, it doesn't get easier, you just go faster. Maybe the competition intensifies, but people's expectations for how productive companies are just go up.
That's a great point. It's sort of resetting expectations. It feels like things are coming. Product news is happening faster and faster on all these AI companies. So it's hard to keep up with.
I agree.
Your valuation has rebounded since we last spoke, I think a year ago. So what is it now? 91.5.
Yeah.
Okay, so
and a half. Thank you for the credit for the
half.
Yeah.
I know. Don't want to shortchange you. Below the peak, still at 95. Well, we talked a year ago, and I think it was slashed to around 50 billion at the time. You were sort of talking about that being an impact of interest rates and sort of the market reality. What accounts for that rebound? And talk about the new price tag.
Yeah, look, first off, we do not particularly obsess about this kind of thing, as I think where ultimately things are worth what people are willing to pay for them. And, we figure if we do a really good job at Stripe, if we create something that users find really valuable, and if we ship things like we're just talking about with agentic commerce and, stablecoin, multi-currency money management and things like that, customers will find them valuable and be willing to pay for them. And, ultimately it all comes out in the wash. But I think we don't fixate too much on the short-term swings in prices, because ultimately we're just in the business of creating a very, very valuable enterprise. That said, growth was very strong over the past year. We announced in our annual letter that payment volume is now up at $1.4 trillion, and so we are now one of just the largest e-commerce payment providers out there in the industry. And in particular, what that scale has allowed us to start doing is we can use the scale of Stripe to make the product better for the marginal customer. And so when we started Stripe, it was very much a focus on ease of getting started, clean APIs, everything like that, but it was kind of a single player mode thing. Whereas now as Stripe scales up, we're making it so that there's a reputation network built in with Stripe Radar. We just announced Radar for platforms, and so we're actually preventing, if you're a marketplace, we're doing fraud prevention on the merchant side of things. We're making it so that businesses can send invoices directly to each other on Stripe. Again, taking advantage of the reputation network we have built in. We have Link, which remembers payment credentials across the web, and so it really smooths conversion. And so anyway, I think you're seeing some reflection of people starting to appreciate that dynamic, where Stripe gets better for user N+1 because of user N in the product.
It's interesting to look at some of the growth under the hood that underlies some of the price tags, but you've seemed very zen about the valuation. You don't seem to obsess about it.
We really don't think about it that much because, again, people go mad like fixating on this stuff. I mean, this is what people complain about in the public markets, is the very quarter-to-quarter obsession over hitting this and beating that. And again, we are interested in genuinely, if you were to sit in on our leadership team meetings, we want to be rock solid infrastructure that is always there for businesses. We want to be the most reliable option, the most secure option, and we find a lot of business just comes our way. When a competitor has an outage, people say, "Oh, I realize I actually shouldn't have been." Working with a subscale platform, I should, work with someone more reliable. And similarly with these new product announcements, those will show up in a meaningful way in the P&L in 5 or 10 years. But just, deep down that those are the correct things to be building, that users are really excited about them. And so you cannot, basically quarter-to-quarter earnings per share is an output metric, and it's a huge mistake to manage a business by staring at the output metrics. You have to stare at the input metrics, which is adoption of new products and customer satisfaction. And we start our leadership meeting every Monday morning with bringing in a customer and then just telling us how things are going. And they're not giving us an A report card. Like, they have real complaints, and it's very grounding as well because they tend to have very tactical, useful, concrete feedback for us. But again, I think you have to manage the business by the input metrics, and the output metrics will take care of themselves.
What would it take for you to go public at this point?
We don't have we're not trying to make recommendations to people about this. We don't have a dogma about it. Right now, there is so much going on. It's legitimately the busiest time since we have been running Stripe. There's so much happening with AI. There's so much happening with stablecoins. Those are two, Patrick called them gale force tailwinds that are taking place in our industries, and we're using it to really improve all the Stripe products. It's driving a lot of growth, and we're super excited about that. And so then companies tend to go public if they want to do a large primary equity issuance to retail shareholders. That's just not a thing that we're looking to do right now. And so we're focused on, again, the input metrics and making the business good. And we've been able to enable employee liquidity, which is traditionally the driving force for this. We've been able to enable that through tender offers that we've run the past few years. And so I think we've actually had a good solution for that.
It seems like there's plenty of demand in secondaries. That is definitely a sea change that we've seen, that there isn't that employee pressure to go public.
Yeah, I think the secondary markets have certainly matured, and you have more it's completely different from when we started Stripe, where you have much more maturity in those. And it also makes a difference when the business is profitable, as Stripe is, and kind of operated in a durably profitable manner. We
have watched all the volatility in public markets. I'm sure it's also, in some ways, a relief to be a private company right now.
I think it certainly helps that people aren't worried about, they start the day opening Yahoo Finance and they see that their, net worth is down 5%. I think it's helpful that we dampen out some of that volatility.
Do you expect a hit to your valuation long term, based on what you're seeing in public markets? Do you go by any sort of, that being a proxy for what your company's going to be worth?
We are very optimistic about the long-term valuation, just because we think the fundamentals of the business are ones of, what ultimately drives business valuation. It's the terminal margin structure, and then it's the long-term growth. And, there's been lots of studies done on this, the McKinsey looking at the super growers, but it's basically the ability to durably grow over a long period of time that makes businesses valuable. And again, what we're seeing is that the businesses on Stripe tend to grow at a significantly faster rate. One stat we shared is that businesses on Stripe growing 35% year over year in terms of their payment volume. S&P 500 growth is 5-ish%, depending on what period you look at, in terms of their revenue growth, not the market index. And so 35% payment volume growth for businesses on Stripe, and 5% for companies in the S&P 500. That's what really drives the value, because we tend to be powering all the new AI labs, AI companies, creator economy, all these vertical SaaS is a huge breakout space where they're powering all the the small business economy across the United States. We're powering the kind of the fast growing parts of the economy, and that drives durable growth for the long term.
What is the most surprising thing you heard at sessions or that you've seen from some of the customer data? Has anything in the last 4 or 5 months stood out to you in a way that people might not expect?
Oh, I mean, there's so much. I mean, the sheer breadth of the vertical SaaS phenomenon, I think, tends to really be slept on by people. Like, there's, AI is not short of, being featured on TV. Like, people are definitely aware of that trend. But basically, small businesses have historically been slower to adopt technology than, the very large companies. But what we're seeing now is a majority of small businesses in the US using some kind of software solution, vertical SaaS. This could be, Toast for restaurants, or Jobber for, plumbers and handymen and things like that. And we're seeing, all these kind of vertical SaaS solutions being built on Stripe. And I think that gets underappreciated. The fact that there is this now tech layer underpinning the small business economy that drives faster tech adoption, faster AI adoption. They're actually, we're getting into the lending space with them, where small businesses have access to credit, which is, the single biggest impediment to their growth. And so that, I feel, is an underappreciated trend.
Do you have any sort of lens into consumer credit and how that's holding up so far?
Not a great one in our data. Yeah.
Got it. I also wanted to ask you about Berkshire. I know Charlie Munger was a mentor of yours. I don't know if you watched the annual meeting, but Warren Buffett is stepping down as CEO.
That. Yeah.
As you reflect on those two, I know you've taken a lot of lessons from Charlie Munger over the years, but the legacy of Warren stepping down and the biggest lessons you have learned from Berkshire Hathaway as you run Stripe, what have you learned from those guys?
Yeah, I mean, what a run, right? Was it 55 years as CEO of Berkshire, as a public company from the time that he took it over? There's a few things. Firstly is the value of tenure and a prepared mind. Warren was at it for 55 years. I mean, Patrick and I have been at it for 16, so 1/4 of the time. But we're young, and so we have some time. But I feel like people sometimes ask us, what's the next thing or something like that. Like, we're just getting started with Stripe because we now are in this really interesting position where we're able to go launch all the super cool stuff. The payments foundation model is, in a way, an obvious idea, but we had to get to the scale where we had a large fraction of the internal economy activity running on Stripe that we could train the models and then go do that. Similarly, something like Link is, in a way, a kind of an obvious idea, but we had to get to this scale before it made sense to do. And so we are really excited about the coming decade of products that we can build and enable, because we're now at the scale where you can build interesting new kinds of products. And again, I think Warren had that mindset with Berkshire, where he wasn't in a rush to trade something based on what it would do next quarter or something like that. He was looking to buy businesses that he felt had staying power over the the coming 10, 20, 30 years. So I think that is for sure one thing that we've taken away. And then having this kind of this sense of a prepared mind, where again you can't predict how things will play out, but you can at least take the actions to be ready for them. And so, they always ran Berkshire such that they had excess cash available because they knew interesting things would happen. They couldn't tell exactly what interesting things would happen, but famously, a bunch of the transactions that Berkshire undertook in 2008 were incredibly successful for them because they were ready for something like that to happen at some point. And if you look at Stripe, similarly, we tried to position ourselves for things happening, new kinds of businesses emerging. And so we didn't predict the incredibly fast takeoff of all these AI companies, but we were building products where we said, we want to make it easy for fast-growing businesses to be able to accept payments from people all over the world, to be able to prevent fraud, to be able to do all these things. And some kind of businesses will come along that really need that. And again, just like Berkshire didn't predict the exact shape of '08, we didn't predict the exact shape of these kinds of takeoffs. But I think having a prepared mind is very, very helpful.
That's great context. And as you said, sort of being ready for this AI boom and being able to capitalize on it.
Totally.
John Collison, it's great to see you. Thank you for coming in.
Thanks for having me.